All right. We got financials starting with BlackRock. Again, if you watch the the energy, kind of seems like the market just had a nasty liquidation break. But then when we kind of take an outward picture, it was nasty. Don't get me wrong, it was filthy. Look at this. This is a nasty one day drop, 28.3%. However, we're still at above May 19th level. You know, like right before this big pot run up, we're still above that. So was the option idea a success? No, it's terrible. That's why we're not going through the options this week. We might try it again next week, but it's terrible. But let's go back and let's do this. We got the 828 or the 618 extension at the 828.86. Now, if we can hold this right here, right? So then we've already double bottomed right here. See if we can triple bottom. If the market selling pressure sustains and it's really nasty, then look for the 798, right? Because we've had some struggle on that. I don't really see the market just rolling all the way over right now, especially not the financials. Because if you know the Fed came out on Wednesday saying they're going to raise rates, that would have been bullish in my book for the banks. However, they rolled over. I know it wasn't immediate, but they were. It's what I mean by immediate. They said that they would be doing it in the next 2 years. What was Wednesday? So we got this was Wednesday. So going into Tuesday, it was a green day. Wednesday we were kind of wishy-washy, and then we rolled over. But as you're going to see, it did it with all of these stocks, right? And if you remember, especially when we look at FAS, I told you FAS has the capability of just destroying you. And it's done it to me before. That's why I knew it. Like we look at Goldman Sachs. Goldman Sachs, we landed right into some resistance, into some support. But man, did we lose 20 plus points to get there in 2 days, right? So here's one nasty day, right? Carried it right on over. Now here, this is interesting. We are below the May. So we took out our double bottom when it came to Goldman Sachs, but we also landed right at the 618. So it can be very interesting in the next couple of weeks to figure out what's going on. Oh, what? Do we have earnings already coming up? What is this? 7/13. Oh, whoa. So it's like 2 weeks from. No, that's 3 weeks. In 3 weeks, we have earnings. FAS. See, this is what I'm saying. FAS had no reason to drop out of the moon like this, but it, like, goodbye. Right? Like, terrible. 2 days. Remember, it's triple leverage. 16% in 2 days. 20 points in 2 days. Right? I knew it had the capability of doing it. It's just we went the wrong way. So the 20 points the other direction, kind of like every last one of these stocks that I was talking about, it had the great move. It just went the opposite direction of what I was talking about. Right? So was I correct that a big move was happening? Yes. I was just incorrect on which direction it was going to go. CME. Again. Ooh, this one's not quite as ugly. You see, we're above our May. We're right around the 318 or the 38. See, this is all right. This is an extension. We have been bumbling around this 50 percentile in between a 618 and a 382 extension, and we're basically still in that range. So yes, it looks like a nasty drop. And was it nasty? Oh my goodness, yes. But we're still way above May. We're 7 points above May low. So, or not even May low. The May low was way over, was right here on the 7th, which was 200. So we're 10 points away from the May low. Northern Trust, wow, this got destroyed. But this is pretty good. Because if you think about it, we made it to the 127 and the 618. So it was a full move. Now this was unexpected. This is Wednesday, right? This is the Fed decision. I figured it was going to continuously go higher as it looked like it was going to on Wednesday. But then Thursday came out and good night, goodbye. Dropped with the whole market. Now it dropping below 109 or dropping below the 100% mark, that raises some concern for me. But let's do this. We're going to do a retracement from the high. So immediately, like right there, you see, I don't want to click it because this isn't the one that I'm really looking for. But when you're looking at the 236 below the 50, we basically landed right there. It's 109 or 109.01, and we are at 109.28. So that they could be playing that game right there, because if you look at the day before, we bounced right off of the 382. But let's bring it down to right here. If we were to go from the March 23rd lows, we would have just broke the 50, which again, this is a little concerning. But we have to look and wait till more or less Monday, because if it bounces right back up, then we know it was a stop run. And what a stop run is, if you've ever heard of a bank run, a stop run. So it's just running stops, clearing everything out for the next leg higher. So TROW price, so again, this is more or less what I was talking about. So Wednesday, Fed comes out, says, okay, yeah, we're going to raise rates in a few years. And the banks are like, yay, because we can charge more. We're going to make more money. It's not like people are going to stop loaning. It's not like, or wanting money. So we're going to make more. Thursday comes, TROW price is loving it. We make a brand new high and then roll all the way over down, 9 points in 2 days. Massive, massive drop. About 5%. It's really not that big. Oh, excuse me. Yeah, if we can get above the 91.31 and stay above that, watch out. Let's go. I like this better because we did not close on a low. If you look at like Northern Trust, we kind of ended on a low, right? I mean, not really, not the low of the day, but close enough, right? TROW price, we're well off the lows, right? Let's talk to Chuck. See, again, it looked terrible, but they're all coming into some support areas, right? So this is a double bottom, give or take a double bottom right here, and it bounced. So they did find some buying pressure, buying support at these lower numbers. Now it's going to be very interesting to see what happens. Bank of America. So if you notice one big thing, that these moves are all at levels, like predetermined levels, predetermined level, basically predetermined level. It gets gapped down, which makes me a little bit more concerned. However, yeah, that was a nasty drop. 5 points on the $30 stock. So we're looking at Or 8.8% in 2 days, 11% in about 2.5 weeks. Very difficult to want to jump in here, but if the selling stops, watch out because it could shotgun itself higher fast. KKR KKR has, I mean, of all the banks, which is crazy because KKR was kind of a pain in the butt, but KKR of all the banks is holding up relatively strong. I mean, this is Monday, Tuesday, Monday we get slammed. Tuesday, Wednesday, Thursday, we're basically higher. Friday, I mean, yes, technically we're lower, but that's like a sneaky red day because it doesn't really look very red. I mean, it is a red day, and it does not look like it's down 1.5%. However, it is. Um, I say look for a breakout. This looks strong enough to try to test the 59.15. If if the market couldn't bring this stock down up to this point, I would almost want to say that this is pretty strong. Same with Blackstone, right? So we make a brand new high yesterday, or not yesterday, on Thursday. Sorry, we make a brand new high on Thursday. So in Friday it looks. See, it says we're down almost 1%, but we got a green bar, right? So it's very difficult to want to say KKR and BX are poised for negativity. Just for the simple fact is that during the last 2 days of the market, where it's market like just disaster market puke, those two stocks did relatively well. So just keep your eye on KKR and BX, and also keep your eye on if the market turns for the positive, get in fast with your hands on the release on the exit button. But again, it's had done a lot of selling, and I could see it coming back and saying hello to us, brand new highs, maybe not next week, but the week after.